Now, our presentation this evening is Corporate Dentistry, What Every Dentist Needs to Know. The panel this evening is composed of Michael Karabash from DMC LLP, Matt Bladonsky from Dental Strategy, Steve Farinato and Chris Malloy from Tax Matters for Dentists. The format will be separate presentations from each member of the panel, followed by a question period. So to begin, our first presenter will be Michael Karabash. Michael is the managing partner at DMC LLP, a full-service dental law firm. His firm primarily helps dentists prepare for, market, and sell their practices. Michael has presented over 100 times to dentists and dental students on legal and business topics over the years. He writes regularly for dental trade publications and on his firm's website. He organizes an annual dental outreach program in Jamaica in conjunction with the Sandals Foundation, which sees Canadian dentists, dental students, and hygienists treat hundreds of impoverished Jamaicans in makeshift practices over a 10-day period every summer. But please welcome Michael Karabash.
Okay, wow. That was a go. I'm so happy I wrote it. Okay, so managing partner, DMC, LLP. Let's see if this clicker works. That's us. We're four lawyers. David, my law partner over there, the better looking one. He's my partner, and we've got two employment lawyers, Jonathan and Lubitsa. We're here to talk about corporate dentistry. And I know this is a controversial topic for some, maybe not. But let's start off with a definition. When somebody says to me, what is corporate dentistry or the corporatization of dentistry? To me, it means a dentist and or a non-dentist getting involved in acquiring, owning, and managing multiple dental practices. Okay, so it could be just a dentist on their own with multiple professional corporations buying practices, or it could be a different kind of model. So that's the idea. So the question is it doom and gloom, this growing trend, or is it a bright sky? So, time to talk. My law partner, David, is going around and he's handing out one-page handout, and it's got 3 questions on it. And we're going to take about 10 minutes, and every table is going to appoint a scribe, someone who's going to basically jot down the answers. Okay? And after about 10 minutes, David's going to come around and collect, and we're going to get back to your thoughts at the end of my presentation. So can we do that? Yeah? Sounds like fun, right? Something different? Okay, I think we are good to go. Whoever was the scribe at your table, please lift up your hand with the sheet in your hand. There is a prize for you. You are receiving a delicious bottle of imported olive oil that I brought back for me from Greece. So thank you for being the scribes. I hope you enjoy it. So as David goes around to distribute olive oil and pick up those handouts, I'm going to keep going. You guys ready? So, why is this all happening? In the US and Australia, they've had corporate dentistry for many, many years. But it's only started to happen in Canada, okay? And so we've had a pioneer or two, and now it seems that there's hundreds and hundreds of more practices being sold to corporate dentistry. So there is a growing trend, okay? And it all has to do with this. Some recent data from Statistics Canada, believe it or not, compiled all of the tax returns from all of the dental practices and dentists in Ontario. And the bottom line is that dentists earn 33% return. This is based on their income tax filings. I didn't make this number up. So if you're a dentist or a non-dentist, bottom line is dentistry is a great investment. It's a great business. You can achieve spectacular returns when you compare that to putting money in stocks or bonds. This is way better. So you have some smart, business-savvy dentists and non-dentists who recognize this, who wanted to get in. On the supply side, we've got dentists who've been practicing since the 80s and the 90s, and they're ready to cash out. It's a seller's market. There's way more buyers today who can access very cheap financing. It's great for the sellers. The sellers can upgrade their home, they can get a car, they can get their spouse a car, they can go on vacation. By the way, Jason, isn't that the new Henry Schein chair that you guys are selling? Yeah? Nice. And so the moral of the story is you've got demand, you've got supply. So if you're thinking about selling, is selling to one of these dental consolidators the right fit? Sometimes it's the only option if you're a seller and they're demolishing your building, right? And you have nowhere else to go and they'll acquire it. Or if you have a bad lease with a demolition clause that gives the landlord the right to kick you out. I mean, David and I, we're involved in buying and selling practices for our clients, and if you have a bad lease, chances are our clients aren't going to buy, the banks won't finance, but a dental consolidator, they can move you. They're not worried about that. They've got resources, right? And the other thing is sometimes they offer better terms. Not all the time, but sometimes they offer better terms and better pricing than what the rest of the market will bear. So you've got demand, you've got supply. And I'm not saying, is it ethical? I think that if I was in your position, having practiced for many years, and you're looking to basically transition and retire, and whoever is giving you the best terms, it's probably what you want to end up accepting. Now, here's the big but. Is it legal? Okay, we know that a dentist can sell to another dentist, no problem. But what about a dentist selling to a non-dentist? Okay? What do the courts, what does the RCDSO have to say about that? Right? So let's check the legislation. Does anybody know how the practice of dentistry is defined in the Dentistry Act? Has anybody ever flipped open that old bit of legislation? So this is the interesting part. I'm going to bore you with a definition, okay? The practice of dentistry is defined in very narrow clinical terms as the assessment of the physical condition of the oral facial complex and the diagnosis, treatment, and prevention of any disease, disorder, or dysfunction of the oral facial complex. Okay. That leaves open the possibility that all the administrative and business tasks associated with owning and operating a dental practice do not fall within the definition of practicing dentistry. So we've got a little bit of an opening there. And I've researched how the Americans define the practice of dentistry. And you know what? Places like Georgia define it similar to ours in clinical terms. But places like Texas will say, if you have equipment and employ people, then you happen to also have a dental practice, you're practicing dental, and they will basically rip up and prevent those people from operating on that basis. So we've got an opening here. And interestingly enough, I don't speak for the RCDSO, but they've written things in their dispatch magazine which essentially confirms this little this delineation between the clinical side and the business side. And there's lots of things, I won't bore you with it, but they say something like a non-dentist can own dental office premises, obviously, supplies and equipment. They say if a non-dentist landlord is providing staff for a dental practice, the dentist must have supervisory control. They let spouses of dentists who are not dentists themselves deal with the dental practice after the dentist passes away for up to 1 year. What about dental records? This is a gray slide on purpose. This is where things get gray, okay? So, right now we come into the realm of good arguments, and there's a good argument out there that says non-dentists can actually own dental records. See, dental records are owned by the professional or the practice who creates them, but courts have said time and time again that dentist, so long as they follow their professional obligations, can actually borrow money and pledge those records to their creditor as collateral to get that loan. And in some cases, dentists have defaulted, and those creditors have seized those assets. Now, they can't access the patient records, but they technically own them, and what they do is they get a locum in place, okay, to access them and make sure that patient privacy and confidentiality is protected. So there's some clever arguments out there that support this idea that non-dentists can also own dental records. I mean, the only way I found out about any of this is there's a dispute. Somebody is suing somebody and it's an open court, and I go to the court and I pull out the file and oh my God, look what's going on, right? But if it's all quiet, hush-hush, and there's confidentiality agreements, we don't find out. Coupled with, the parties being motivated to make money, the rest of us won't find out. And that's basically been giving the green light to these dental consolidators to keep going and acquire all these practices, right? Now, what is the difference if you're going to sell to one of these dental consolidators versus just selling to any other kind of specialist or general practitioner? Are there differences? There are. There are slight nuances, and you should be aware of them. Okay? So, there is the process, generally, of selling a dental practice. Okay? First, assemble your legal team. We're going to take a look at your team contracts. A dentist called me up today, and she said, I want to sell my practice. And the first thing I said is, tell me about your team contracts. Well, there are none. And I said, that's a problem, because there's all this liability on your shoulders that you're going to ask a purchaser to absorb when you go to sell, because you don't have written contracts in place to limit that liability. And she said, what do I do? And I said, well, I hope you've got a really attractive practice. That would help. And she said, what else? And I said, some buyers, like these dental consolidators, are willing to accept that liability where nobody else might. And that liability could be huge. Think about, 2 years worth of salary that would have to be paid out to a very long-term staff. When you add it up, assuming there's no contract, we're talking hundreds of thousands of dollars of liability that, if you didn't have that dental consolidator just saying, yeah, we'll accept it, you would end up taking a hit on the purchase price for anybody else. And David and I see that all the time. Okay, so team contracts, really important. The landlord. If you Google landlord, this is the picture that comes up. Does anybody know? Anybody that looks like this? Okay, so I talked briefly at the beginning about leases. And what happens if your lease has a demolition clause or a relocation clause or some nasty clause that allows the landlord to kick you out by giving you notice? Well, the difference between any other purchaser and a dental consolidator is they can move you, they don't care, they can pay it out, they can try to negotiate with the landlord. They have resources, right? The big problem with leases today, I mean, I've got a practice with a demolition clause. It's been on the market for 2 years. Nobody will buy it. And we ended up having to bribe the landlord with $25,000 to basically agree to remove the demolition clause. And they agreed, but it took 2 years to get there. Had a dental consolidator been attracted to the practice, they would have said, nah, we don't care. We'll take the risk. If anything happens, we'll just move them to another one of our nearby practices, right? So that's another big issue, because banks, once they smell or see a demolition clause in a lease, they back off, and it's hard to get financing for a purchaser. Here's a big distinction. When you sell, ideally, your lawyers and accountants will say you want to sell shares of a professional corporation instead of the assets themselves, because there's big tax benefits to doing it. I'm not going to get into the details, but the difference is when you're selling to a dental consolidator that involves non-dentists, they can't just buy your professional corporation as is. They won't do it. What they want to do instead is they want to buy the charts on day one as an asset sale, and then on day 2, they're going to buy the rest of your corporation having all of the other assets in it. Now, I think Chris and Steve are going to come up later on tonight and talk to you about the difference between selling assets versus selling shares. It's definitely better for you guys to sell shares. There's way more tax advantages. And also, if you have to do this 2-stage, 2-day maneuver, there are added accounting and legal costs, so it becomes more complicated. But that's a definite distinction. Okay, appraisals. Okay, anybody thinking about selling, do I need an appraisal if I'm going to sell to a dental consolidator? Actually, no. They take a look at your financials, and they're a lot of the time prepared to make you an offer right then and there based on the numbers. Should you get an appraisal? Absolutely. And what else should you do? Should you market? Oh, I recommend marketing. and it's very simple. You have one chance, one shot to sell your practice. You don't really know, even with an appraisal, what it's worth. You should take it out to the market, get some offers in hand, and if you really do want to sell to the dental consolidator, at least you've created some leverage, right? I'm all about taking risk off and increasing leverage. That's what David and I do. And you can take those offers to the dental consolidator and say, hey, I've got these, you tried to lowball me at the beginning, but I went out and I marketed and I got these offers, so this is what my practice is really worth, right? The LOI stage, the letter of intent, this is a key document that outlines the terms upon which the deal can proceed, who the parties are, the purchase price, and the other terms. What we've seen sometimes, even though I mentioned earlier that it's a seller's market, are dental consolidators pretend it's a buyer's market, and they throw letters of intent at you just to see if something sticks, right? And those terms aren't necessarily good. I mean, sometimes they lowball on the purchase price and they put a whole bunch of other terms in there that are not ideal, especially if you were to market it to the general public, population of dentists. So we'll get into some of those terms later. Do you guys have an idea of what dental practices sell for nowadays? That's a loaded question. A lot of people say, 1.2 times revenue, or 1.1 times appraised, or whatever. What I look at is cash, and this is the key number for me, and the banks as well. So 4 times adjusted cash or net income. So this is revenue minus expenses multiplied by 4. Now it's not as clean a calculation as you think, because you have to adjust the bottom line and take out all those personal and discretionary expenses. You add them back to the bottom line. So if your spouse doesn't do anything, but you have her on as a bookkeeper and she actually doesn't do any of that, and she gets paid $40,000, add that $40,000 back to the net income. And so, I mean, out of all the dental practice sales that David and I have been involved in, this is the average. And this is what the banks are comfortable with that number. So if you're grossing $1 million and you've got adjusted cash flow of $300,000, expect your practice in an open market, assuming you don't have any nasty leases or, no staff on contract issues to deal with, $1.2 million is what it should go for. The purchasers, including the dental consolidators, will do their due diligence, look at your financials, your lease, your team contracts, make sure everything is hunky-dory. They've got an army. They typically have like an army of lawyers and business people involved in the process. Another good thing about, if you are thinking about selling to a dental consolidator, is that they can make the transaction relatively smooth and they can accommodate you. You'll hear anecdotes that are completely opposite, right? I always ask when some of my clients sell to a dental consolidator, how was it? And you hear everything under the sun. In terms of the agreements, these are the formal 40, 50-page, all the bells and whistles in these types of agreements that are, signed by all the parties. And then you have a closing date. Just like as if you were buying real estate, you'd have a closing date. On the closing, there is an exchange of documents. There's an exchange of funds. We do it the old-fashioned way. It's funner, right? And afterwards, you may be the associate. And if you're associating for a dental consolidator, it might be a little different. There's been a trend that I've noticed that they are treating associate agreements much differently than just any general dentist would. They're introducing terms that are in their favor. Chart fees, like if you leave and you solicit and a patient comes over, you have to pay $1,000 for that chart fee back to them. They're putting holdbacks on purchase prices. One of our clients sold for $1.4 million recently, and the dental consolidator said $200,000 holdback. And we're like, why? And then, just because. That's us. That's how we operate. We do it on all of our deals. Punitive damages. It's just like in my opinion, punitive damages are illegal, but they try to disguise them as something else. And they'll say, listen, if you solicit, if you compete, contrary to what you're supposed to do, if you take an employee with you, $200,000, you have to pay $200,000. And I'm like, that's egregious. No court would ever enforce it. And they said, yeah, we don't care. We just like putting it in there. And I say, yeah, but if we sold this to anybody else, they wouldn't even think about putting in these terms which are unenforceable. And they said, oh, well, my lawyer says it's legit, so let's just leave it. And so my point is, be careful when it comes to the associate agreement. When you're associating, pay attention to the terms, negotiate hard, hopefully from a position of leverage, and just don't believe all of the glitter and glamour. Get your lawyers and your legal team to review it thoroughly. So our final message before we start looking at some of your comments and concerns is get educated, get protected, and when you do transition, make and save the most money. Okay? Time to talk. David, where are you? You're over there? You want to use this mic here?
No, I've got a loud voice. So one of the things we've noticed when we talk to dentists is dentists are often afraid to talk amongst themselves. Sure, you have colleagues or maybe one or two you speak to. When you get into business matters, a lot of dentists don't talk to other people because your business generally is private and you don't want to share that. So the exercise of having you guys write down the answers to the questions on the sheet, no one put their names on it. I'm very smart because I forgot to tell you guys not to put your names on it. But in an anonymous format, we're actually able to see maybe. Can you guys hear me okay?
Yeah.
In an anonymous format, we're actually able to see what's in the minds of you guys, the dentists, when it comes to this idea of sort of corporate dentistry. So just from looking through all the sheets, and most of you have terrible penmanship, thankfully you're not writing my prescriptions. What I can tell you, these are the common themes. And Michael, I'm going to talk slowly if you want to add in a sentence or two afterwards. So the first question that seems to be on the sheets is it happening? No one raised their hands to ask that question. This is on a bunch of the sheets. Is corporate dentistry actually happening?
Oh, it's happening, and it's happening at a much quicker rate. 5 years ago, 6 years ago, when David and I just started, it wasn't really a big deal. You heard about maybe one entrant. I just heard last week about 2 new entrants going out west with a goal, and these are big, sophisticated, investor-style, organizations, very resourceful, very smart when it comes to dental, and their plan is to buy up hundreds of practices. Okay, so it's definitely happening.
A couple of things that were already covered. One, a lot of people ask, what's the definition of corporate dentistry? I know Michael talked on that for a second. A couple of questions I don't think we have time for today. Questions of, how is it run? What are the obligations upon the dentist after they make a sale? One that I think was on almost everyone's sheet was risks versus reward. So obviously people are thinking about it, is there a benefit or is there a cost to it?
Let's just stop right there. I think it's important for me, because I always ask my clients who sell to the dental consolidators, what's the experience been like? And are they really good, or are they putting, profits before patients? And for the most part, they say, no, you know what? They're smart, they're savvy, they've got systems in place, they've taken that administrative burden off of my shoulders. I don't have to worry about marketing or personnel or technology or ordering supplies. And assuming that you've negotiated very well in your associate agreement, your schedule, your time off, your remuneration, you should just be going to work and doing dentistry. You could probably even squeeze into your associate agreement, who you can make referrals to, what kind of lab you can use, and those type of terms. So I really do want you to believe that you have the power to negotiate, as you would with any type of buyer. David?
And a lot of people also ask what the future holds.
The future is what you make it. If you want to sell because you're getting the best deal possible, that is what it is. David, did you have any more?
Those were the big things about what you wanted to know more about. I didn't bother to summarize what you already know, but I looked at the third question: what, if any, are your concerns about corporate dentistry? And that's fair, because if it's not your everyday business, the fear of the unknown often is there. But I think you've already covered everything. Most people ask, patient care versus business care. Where does the priority lie? Most people had concerns, and here's another good one: the future for young dentists. So people just coming, I assume that means people coming into the profession just recently graduating. So there seems to be a concern for young dentists. And then now here's the one that's a little more self-interested: the freedom as an associate dentist, where you've gone from the position of owner, now you're the associate. So I thought those were 3 very valid concerns.
Yep.
And that's what was on almost everyone's sheets, except for someone in the back who didn't write anything on one of the sheets. I didn't want the all the way back. I will find you before there. He's admitting it. 3 o'clock in the parking lot. No, you're later. Never mind.
Yes, we have a question in the back.
I can make a verbal query, can I not?
Yes, of course.
From an associate dentist standpoint, and how does a dentist get paid in this corporate structure? Does the RCDS rules not say that it is frowned upon to share your fees with somebody that's a non-dentist?
It's an excellent point.
Let me jump in quickly.
Yeah.
Because we know things about people, we are not in a position to share those things. Part of the burden and also the blessing for clients is that the solicitor-client privilege is very strict. So we can't necessarily give you any real examples of anything.
Here's some real examples. You ready? Okay. Wait, no. These are in the public realm, so these are legitimate. Smile Corp versus Dr. Peason. Anybody heard of this case? Okay, so it's a denturist who had a written agreement with a dentist to rent an operatory. And RCDSO would say, looks good. On paper, acceptable, right? Has nothing to do with patients. In reality, the denturist was taking 60% of billings. Illegal fee splitting? Yes. How did we hear about it? It was a court case. There was a dispute. Dr. Peason left, and he solicited patients. If we don't hear about it, if there's no public dispute, it will happen because you have motivated parties in a gray zone. There's another case that happened about a year and a half, I think maybe 2 years ago.
Are you saying it's only a crime if you're caught?
I'm saying, here are some examples. There was a hygienist, and she had a company called Botany, okay, up in brands of patients, 3,000 patients. I wrote about these things. And she was hiring associates and giving them a percentage. Again, illegal fee splitting. It will and has and continue until there's a public dispute. Interestingly enough, we have found in some of these agreements, they're called business services agreements, right? And they're presented to you by a dentist partnered with a non-dentist. And these business services agreements may say, you know what, you are going to receive X percentage. The dentist and or the non-dentist is going to get the rest. That's an agreement between them. That's it. And again, I'm sure the dentist and the non-dentist sign confidentiality agreements. They're not going to, put this into the public realm. So it's hard for people like us to find out what's really going on. We've got 3 more minutes. Yes.
I didn't quite completely understand. The consolidator, if he's got a good practices of bringing in the revenue and then gives a percentage to his associates, right, with the practice, why is that not income split?
So the question is about fee splitting between an associate who's a dentist and a non-dentist.
So you're talking about it, if you do it one way, it's illegal, and if you do it another way, I'm asking.
So what we've seen, based on the paperwork, I mean, listen, a dental consolidator could just be a dentist. Forget the whole non-dentist being involved, right? And they just hire the seller after the sale. Here's the associate agreement. You bill, I take 60%, you take 40%, okay? The difference, the slight nuance that we've seen with a non-dentist being involved in this mix is that the sentence says the associate gets 40% and the remainder goes to the principal dentist who acquired the professional goodwill, the charts, right? And / or that non-dentist entity. And to back it up, this is also very interesting. Later on in the agreement, they'll have this severability clause, which is just a legal term that means if a court ever looks at this and determines that arrangement was illegal, well, that severability clause instructs the court to cut out the illegal part.
Gotta love lawyers.
Right? Carmela, does that make sense now? And again, if there's no public dispute...
A little bit, except that everybody's doing it. And that's fine. I thought it was actually an acceptable.
If everyone's doing it, is it a crime? If I can, I'm the neurotic, sorry, I'm the neurotic risk.
I didn't mean it that way. I mean,
Okay, last question. Yeah?
As a neurotic risk-averse person, I just want to make sure that some things that maybe weren't crystal clear. So I'm here as the editor, sort of staying off to the side. The consolidator doesn't have to be a corporate entity. It could be an individual dentist who's just buying a lot of practices, where maybe there's a corporate feel to maybe the structure of one dentist owning multiple. Multiple can be 2, can be 5, 10, 20. We see all these examples, so don't think automatically there's like, Bell as a corporation or Rogers, like IBM, like these big companies. Sometimes it's just an individual person that is behaving in such a fashion. Secondly, in terms of the income fee splitting, don't forget, when you're dealing between dentists, it's one set of rules. It's a dentist with, and we usually get a call, at least at our office, it's always a hygienist, but once a week, saying, I'd like to buy a dentist. They don't say, I want to buy a dentist office, I want to buy a dentist to work for me. And we always say, we look for dentists, not hygienists, we can't help. But the advice we often give is, if something goes wrong in a regulatory way, who does the RCDSO govern? Who is it that's got more to lose? Is it the dentist who's got their registration number, or is it the person who's not governed by the RCDSO? So other things to consider if you're dealing with a non-dentist, because there are people who are hygienists or even dental assistants, etc. People in the industry but not a dentist. So just be aware there's a bunch of different permutations that you might have to be looking at.
Okay, I'm going to self-regulate and say we're done. Thank you guys so much.
Thank you, Michael. That was great. We're going to move on to our second presenter.